The M&A Advisor is very pleased right now to be joined by Jeremy DePeters, Managing Director of Winchester Capital.
Hi, Claudia.
Jeremy, thanks for being here.
Thanks for having me.
Tell us a little bit about your role with Winchester Capital.
So my role with Winchester Capital encompasses both our M&A and our asset management businesses. On the M&A side in the United States, I run all of our execution, either buy side or sell side, working with our clients to develop and execute their transactions, as well as research and develop new and novel ideas for our clients to acquire businesses, hopefully on a non-auction basis where they can avoid the chaos and the clutter of being one of 12 bidders. On our asset management side, following our acquisition of Weber Capital from UBS Americas, we acquired 28 different investments on a secondary basis, LP positions and direct, and I manage that portfolio as well as help oversee the firm develop further into that business model. So we're looking at secondary assets that we can acquire for value and generate returns for our investors.
What would you say would be the drivers of deal volume?
Deal volume, I think, is driven by a couple of different factors. Lately, it's been a huge amount of cash and the need for companies to expand their markets. They're finding, especially in developed markets like the United States, the United Kingdom, and Western Europe, that they've really tapped into as much growth as they can get out of their domestic footprint, and they're seeking overseas acquisitions that can get them into a market quickly and get them exposed to new customers, whether it's bringing products that they already have to a new customer base, or whether it's seeking new products that can be an add-on to their existing product line. And I think that's continuing to drive M&A, along with very low interest rates, giving people an ability to buy at low prices. On the flip side of that, those low interest rates are driving up prices altogether, and it's causing buyers and sellers to not necessarily meet in the middle. So part of the our goal as an advisor is to help our clients execute and get the best deal that they can, but still have a transaction happen.
And where would you say the opportunities are, both in the U.S. and abroad?
I think in the U.S. Particularly, there's an enormous amount of opportunity in technology, in intellectual property, in science, math, and healthcare. These are big sectors, especially with the United Kingdom. You've seen a very strong investment into the United States in these sectors. Abroad, oil and gas, while it's on a very low dip right now, is a huge sector. There's an enormous consumption of energy, and a lot of money is going to be flowing into the oil and gas sector, as well as the technology sector. A lot of the speakers today have talked about China and its rise and the use of technology to tamper down cybersecurity. So I think those are definitely aspects and areas that we can look for greater growth.
What are the changing trends that you've seen over the last few years? I mean, we had a slowdown for a while,
right,
and now M&A's back, getting exciting again.
I think, you've seen the return of the strategic. For a long time after the 2008-2009, there was a lot of private equity money out there, and they were very picky about finding deals. But you've seen the strategics come now with over $1 trillion, some say up to $2 trillion of cash on the balance sheet, and shareholders are saying, do something to ignite growth. So they're looking for assets. They're trying to buy anything that they can that they think can add to their core competencies. And I think that's going to drive a lot of deal value and volume in the 2015-16 timeframe, where these companies are going to be forced to give money back to shareholders.
And what do you see on the horizon? I mean, we don't have crystal balls, but what do you see as far as activity throughout 2015 into 2016? I
think activity is going to be pretty robust. There's a number of different changes that are coming down. The elections in the UK this year, the potential, the US presidential election and potential change of party. I think everybody likes the fact that it's status quo and no one's doing anything. And right now is a great time to get deals done when you sort of know what the rules of the road are. No one's sure what's going to happen in 2 years. No one's sure what's going to happen with the Fed and raising interest rates. So it's best to borrow money now, affect your program, build your company, add strategic value while you know what's going on, before a lot of change happens.
From your perspective, you've been around a long time, you've been doing this a long time. What makes Winchester Capital stand out? I
think not only our heritage and our 29 years, but our significant and distinct ability to find non-auction or very unknown transactions that are highly strategic to our clients. We run sell-side processes. We do it just as good as any other bank out there. But I think particularly for our buy-side clients, we can find them assets to buy that make a big difference in their business model and their plan that perhaps they couldn't find on their own, or they weren't able to get through an auction process. So that's one of the things that I think we do quite well.
Very exciting, Jeremy. Thank you so much for talking to us today.
Great. Thank you so much.
Great information.